Hello everyone, Scott Bear here, Mortgage Pro, and I am part of your real estate success team here at Realty Pro, and I am here to make you successful. Hey, I wanted to get right to the rates. We've had a little bit of a reprise in rates as of late, which is a good thing. 30-year fixed rate is at 4 3/4, 15-year at 4 1/8, 5/1 ARM at 3.625, 7/1 at 4% even. FHA is at 4.625. VA is at 4 3/4, and USDA is also at 4 3/4. I wanted to talk a little bit about the volatility in the rates as of late. It's been very volatile lately, and just as of Wednesday, for example, 3 days prior to Wednesday, we've had a intraday mortgage-backed securities pricing trading range of 75 basis points each day. So it's just very volatile. It's just going up and down, back and forth within that rather large trading range, 3/4 of a percentage point. And it did that for three straight days prior to Wednesday. And then prior to that 3 day period, it traded within a 100 basis point range for each of those days as well. So it's been very volatile. As of Monday, Moody's bond ratings firm said that France was at risk of very possibly losing their AAA credit rating. Well, that's rather bad news because Germany and France are actually considered to be the two countries in the entire Eurozone that are the most stable. So when you get news that France isn't doing so well, that's obviously not the best of news. During this time when we hear of volatility in the Eurozone, obviously we are considered a safe haven during those times for bond investors to bring in their money. And of course, that improves our market and helps with home loan rates at that point in time. But on Tuesday, China came in and they were saving the day. They said that they were going to take some concrete action and they were going to be buying bonds in the Eurozone. So they came to the rescue, and it's very much within their best interest to protect and stabilize that area because Eurozone is a rather large importer of Chinese goods. So when there's stability or for that matter, volatility in the Eurozone, China does not bode very well. So it's definitely within their interest to stabilize that region. Now, we need to keep in mind that if France, considered one of the high points in the Eurozone, is possibly at risk of losing their credit rating, we need to look at that very personally on our side of the fence. If we don't take care of our debt problems and make a very concrete plan of action as to how we're going to take care of that, we're not going to be much of a safe haven for any volatility that might happen abroad. So we need to definitely take this message to heart and do something about that. On Wednesday, there was a gross domestic product came out. It was 2.6%, and which is actually better than it was last month, 2.5%. There was definitely an improvement. But we need to also, from what I understand, keep in mind that that was on account of the inventories going up, and it's pretty common prior to a holiday season for inventories to go up. So it's not very surprising that the GDP would go up accordingly. Now we need to see the demand for the GDP, or I should say, we need to see GDP go up and be consistently above 3.5%, and that needs to basically come from consumer demand as opposed to inventories. So when we see that consistently taking place, then we'll have some definite good news on the horizon for our economy. Now, from what I understand, the consensus is it's likely that the GDP will not be in that range for most of 2011. So just keep that in mind. Some other data, very great data actually. Existing home sales increased 5.64% from October to November. Great data. Inventories, they went down 9.52% from October to November, from 10 and a half months down to 9.5 months. Now, of course, this is national data, but we need to take in and keep in mind about the national data because it is a catalyst for what happens here locally as well as what happens, concurrently. So it's just a good idea to keep our eyes on the national data and know what's going on. New home sales, it also increased 5.4% this month. That's fantastic. And the consumer sentiment actually came in at 74.5, which is the highest level since June, which is fantastic as far as consumer sentiment is concerned. Now, where exactly all this consumer sentiment is coming from, I'm not exactly sure because my sentiment isn't exactly the best. But hey, I don't determine the market, and I suppose that is a good thing. So I wanted to wish you guys a very Merry Christmas. Spend time with your family and your loved ones. Take a little bit of time off and smell the proverbial roses. And I hope that everything goes well and you have a great weekend. And we will talk to you beginning of next week. All right. Bye bye.